fucking night of my life, and wherever it takes me, I'm down for the ride. Baby, don't you know I'm good? Yeah, I'm feeling alright. 'Cause I'm good, yeah, I'm feeling alright. Baby, I'ma have the best fucking night of my life, and wherever it takes me, I'm down for the ride. Baby, don't you know I'm good? Yeah, I'm feeling alright. Cause I'm good. Fuck!
but you're still the same. We're gonna get through this. I'll be there every day. You should shooting star. Now it's time for change. I gave you a chance, but you're still the same. We're gonna get through this. I'll be there. Every day.
Just let me out. Just let me out. Why don't you? Just let me out. Why don't you? Just let me out.
All right, guys. What is Gucci gang? What is going on? What up, man? How are you guys doing? How are you guys doing? It is FAFO Friday. And that's that. It is FAFO Friday. You know what I mean? You guys ready for the weekend or what? Are you guys ready for the weekend or nah? Chat is member only today. It's been free for a while. We've been losing members, actually. Believe it or not, we've lost like 10 to 15 members in the last month or two. So, you know, I don't know, man. I don't know. Don't know what to tell you. Do not know. What's good? Toby, Naruto 2020, Jay Jones, Convicted Capitalist, Eberneth, Marshall, G, Felix, Mr. Young, Crispy J. Toby had an amazing week. Very nice. Manuel said they tripping, bruh. Channel is on a discount. Oh, it doesn't get any more discounted than free, right? And yeah, appreciate that. I mean, IML is no longer a thing. They've rebranded yet again. So, you know, but I hear you. I hear you, big fella. I do. Who else is in the chat? We only got 27 people. My goodness. Yeah, I don't know, man. I mean, I don't know. I give value, I give trades in advance, but like I lose people for some reason. That I don't understand. I really don't. But you know, it's out of my control. You know what I'm saying? I don't control whether you stay or leave. And that's that. So that is that, chat. Oh, that's the weekly. It's not what I was looking for. This is what I was looking for. All right, there we go. Was good, Remy? There's a couple of you newer members, which is cool. Don't forget to join the Discord. You can do that by going to your Discord user settings, go to connections, and then there's all kind of social media that you can sign into the YouTube that you use to get a membership here, and then you should see the Discord. Some people still have not figured it out. I don't know how to help you. All right. So, I think it was I think it was Tuesday's market review or Wednesday's live stream or Tuesday's live stream. It was somewhere, because yet again, I didn't write things down. But I do know that we talked about November 6th and November 7th. Because with the candle closure of November 7th of last week, I told you that we had a really large imbalance. And, well, I don't know if it was on this one or Dow or ES, but they're all the same. They were all the same. Oh, damn, Mr. Young, GG. GG's in the chat. GG. What's good, Crocs? So, anyway, I told you that the indices, one of them, that November 6th candle was too large, in my opinion. There's not a specific amount of percentage or points or anything like that that I look at and I go, that is going to be either that's going to remain open or that's not going to be left open. And that to me was one of those ones I was like, yeah, that's not going to be left open. That's what I think. Obviously, you know, with probabilities, it could be, but I highly doubt it. Because why? Well, think about it. Just like with gold too, in a similar fashion. Look at it, right? Look what we've done this year. We created all-time highs in July 11th. We had some wicked volatility in August, right? And then we finally navigated our way out of that, you know, in a couple months. And then we got pretty much sure, there's down movements, of course, but generally there was a bull run since early August, right? We set the low around 18K for Nasdaq. And then we've rallied and rallied and rallied. And then we hit all-time highs the other day. I don't know which day specifically. It might have been the 7th. And then we traded a little bit more above that on November 11th, right? So, I mean, how far do you think price is going to go in one direction before it turns around? You know, who was it? Heraclitus. No man steps in the same river twice, or it's not the same river and he's not the same man. So what he was saying is that things are always changing. Things are always in a state of fluctuation, just like order and chaos. I was writing about that in my journal earlier. You know, chaos doesn't last forever. Order doesn't last forever. We're constant, just like in trading as in life too, we are constantly going from order to chaos, order to chaos. And so the markets, you know, they're going to go from bullish to bearish or consolidations to expansion, small ranges to large ranges, what have you. And so we've already been on a bull run for months. And then election time comes around and then we got an imbalance, large, actually, there's a second one here too. But that large imbalance here was on the way to all-time highs. So is a move like that sustainable? Usually not. Okay, usually not. Now, if you go, I mean, this is on any time frame, but predominantly the focus for this idea was on a daily. You can go back into history and you could argue, right? Oh, well, yeah, there are some imbalances that are left open. Right. And I'm not denying that. But look at this. This imbalance down here, okay? That was not just prior to all-time highs after a bull run. This imbalance here was more like we're off all-time highs. We're relative in a discount. It's probably like 40% or just below it right here. So that could act like a breakaway imbalance. You see what I'm saying? And yeah, that weekly. Nothing really on the weekly that's worth mentioning in this regard to what I'm talking about. And what's that saying that I keep telling you guys about anyway? How do you know if this is going to be a breakaway imbalance? Well, I don't always know. Okay. But remember, if there's another one right after it, then now you have two. And what has the rule always been? When you have two, you take the first one with a stop at the second one, because the lower one could be a breakaway imbalance. How's that? Right? Structure limits chaos. Order. The higher the order, the less the chaos. You understand? The more rules you have, the more little nuances and these little things like the rule I just gave you with two imbalances, or about how the first imbalance on a new price run is either going to be left open or not traded all the way in. All those little things like that. However, concept has a premium and discount and macros and all this shit. The higher order you have, the less chaos you have. The less of not knowing, right? So sure, coming back to what I was saying, sure, you can have imbalances that are left open, but there's a big ass difference between September 11th here and November 6th here. They're very different. Okay. So why would I explain all of that to you? Because, well, number one, the last time I was able to navigate the elections were in 2020, right? That was a long time ago. And we haven't been in presidential election conditions in 4 years. But here, you know, we were able to navigate to some degree. So this is what I'm saying. It's kind of like, and I tried to get a little bit philosophical. I don't know how good of a job I did, but yeah, I tried. It basically said, and that's like a biblical principle here. For the house built upon sand, or for the house built upon sand lacks a real foundation to weather the eventual storms. Collapse is inevitable. And that's what I'm saying. You have one candle with this big ass range, and you expect that to just hold? No. No. So sure, we went from large ranges to small ranges. What happens after small ranges, chat? After small ranges comes what? Large ranges. How difficult is that? How difficult is that? And then on top of that, you have the old gap here too. You didn't see that, did you? We got no sell side delivery, but we did get buy side delivery. So how far can price go beyond a low? An imbalance. How far can price go into an imbalance? Well, there's multiple answers for that, but in that case, it would be what? A gap in which we have traded into, and we're actually a little bit beyond that. And that's fine. I'm not trying to predict the low. I'm not trying to say low of the day is here or nothing like that. But I'm just saying, like, what is something that's relatively reasonable to aim for? Mitigation here too, right? So that could have been a downside target here. We've obviously overshot that as well. And I don't think we're done. I still think we have room to go. I have an alert over on Dow, but I don't want to tell you about it yet. I was trying to see if it would hit first before I try to explain it to you. What's good, Mason? Welcome back. What's good, Carcel? Well, GG's, Mason. What's good, Stephanie? All right, so with that being said, let's go over to... You know what? Dow might not actually hit that alert, but that's okay. It's not our weakest index today, so I probably am asking for too much. But I guess I'll still explain it to you. All right, so Same thing. ES, very large imbalance from November 6th, right? Basically the election had taken place there. I think it was the evening of Wednesday, so it counts, or excuse me, I think it was the evening on Tuesday, which technically counts as Wednesday's candle, because that's how it works. So, but yeah, like I said, same thing. Small ranges. What happens after small ranges? Large ranges into an imbalance from that election. Okay. Dow Jones, similar story, but you can tell the difference here. The Dow, not as volatile, and it's not as deep of a retracement. You see like 0.72% on the day, according to TradingView, and then Nasdaq is down 2.5%. So obviously, Nasdaq being the weakest index today and having, you know, the more volatility, it would have been better to short Nasdaq than the Dow. All right, but that is the reason, okay, for stuff like this. All right. Now, I'm not trying to, you know, continue. I'm not trying to continue to like brag and say, look at this, look at that, or whatever. But, you know, if I'm someone who does this every week, you know, in advance or just before the move or whatever, and it's not always a timing thing. And that's why earlier this week I said that, or yesterday, I said it's not a timing tweet. But if I'm going to tweet something and it usually works more than it doesn't, I'm trying to give you that sort of edge in the marketplace, okay? And so what would prompt me to say that? Well, I gave this to you already. I'll do it again. November 6th, candle, right? Very, very large imbalance. And the low end of that is what? 43,806. So what's like the very next target after that? 806. It only takes 6 points less, and you've got what? 43,800. That's the easiest and earliest available target. Well, on the daily at least. Not to, you know, say that there wasn't something on a smaller time frame, but just on the daily itself, the earliest available, easiest to me, 43,800, and that's why I said that. Now, how far can price dig into something like this? Now you know why I've got an alert at 43,462, which I still think we could get on the day. Might not get that on the session or at all, but I'll at least tell you why I would think this way. And let's clean this up. All right. So what we're doing is we're going to drop down into a smaller time frame and look at this price run. All right. Which is basically here. Okay. From 42,460 and 43,806, those equal lows, which was pointed out to you like the day or the day after that was there anyway. So when we're looking at price runs, I'm looking at things that are efficient and inefficient. So what I'm saying is we take a look at these lows. How far can price go below that? Well, an imbalance probably. Okay. Well, you look at this in here, meaning you look at all this. Is there really any imbalances in there on this time frame? Not really. There's a lot of price delivery on both sides. So where is the next one? Right here. On this particular time frame. And the high end of that is 43,462. So that's why I said that's an alert for me. That's a downside target. Am I in a trade? No. But if I was, that's what I would aim for before the close of today. But we don't have to get that. Okay. And so this is where we are now. And I've sort of just kind of kept these tweets on here, you know, obviously to show you, but the whole point, right? The whole purpose is, let me see if I can put all this in one chart on the screen. The whole point, okay? High probability trading at the end of the day is to get in sync with price delivery. That's it. Get in sync with price delivery. So if you know, hey, we've got equal lows on a 1 hour time frame, which is also the highest end of a daily imbalance that happens to be very large, created from the volatility of the presidential election. We may not go down there, you know, expeditiously, because the markets, you know, they go from expansion to contraction or expansion to consolidation. So if we're going to see smaller ranges, then we're not going to see sustained moves, you know, all the time. Instead of just trading straight down, right? It's going to have its down movements, but it's going to retrace. Down movements, but it's going to retrace until eventually, yes, it will be ready to run lower. And that's why we have things like premium and discount. That's why we have things like, say, day of the week, for example. And, you know, once the high has been set, it was set on Monday, and, you know, price is bearish now, then all you got to do is get in sync with that, and you're golden. You don't have to get all the way up here or, you know, the highest highs, right? As long as you're getting in sync with it, you're going to take much, much better trades. All right. You guys with me so far? Now, the only thing that I would say was probably tricky for this week, because I see it on Twitter. People saying, oh, I've been on a losing streak. Oh, this was the worst week of my career or the worst month of my career, whatever have you. You know, I don't know why specifically it happened for those people. But what I will say is the market did, in fact, leave behind. Well, at least for ES. Right? Well, I guess NQ as well. But yeah, to be fair, those are lows. The market for ES did leave behind multiple sets of equal highs. I'm not going to deny that. But remember, because I get asked this every once in a while still, how do you, I guess, trust that equal highs are going to be left open or equal lows are going to be left open? And it's not my favorite thing to do, to try and, you know, predict something like that. But I would say, again, higher time frames are going to take precedence. Higher time frames are more important than the smaller ones. So if you think about it, sure, 60-25 and 60-12, those are like intraday equal highs. Sure, I wouldn't deny that. But look at the daily. We would have to extend, let's say Thursday's close, and then today you would expect what? That we would just somehow potentially leave that open, but trade higher after we've already done like this fat move here. On top of the fact, and I guess I deleted it. I didn't mean to do that. But on top of the fact that we still have these down here too. We still have 57.24. So longs in here, technically, you would be longing when there's equal lows present or triple lows present. And that to me is like a big no-no. Wait, John, didn't you say the other day that you long Nasdaq? Yeah. Doesn't mean you can't scalp, but go back and look at the way that I did it. Look at the tweet specifically. The verbiage, the language, the timing. You look at it. As soon as we got a new high, I said, yep, this is going break even or stops going into profit. We have a higher objective basically because I said the first set of highs has been met. And why would you hold open risk when highs have just been met and you're in a potential bearish market? Why would you do that? You can scalp on an intraday basis all you want. But if the daily is predisposed to go lower, don't overstay your welcome. You're stepping in front of a moving train. If you stay on too long, you're going to get smushed and your account's going to get fucked. And that's how that works. Okay. Matter of fact, we can go back to that. That's not a big deal. That is not a big deal. What day was that? I think that was Wednesday. Oh, I'm looking at ES. Well, no fucking wonder. No wonder that wouldn't work. Was it Wednesday, chat? Now I can't remember. Man, I just should have took probably more screenshots, huh? Tuesday. All right, well. I could have sworn. Maybe that was here. Maybe that was yesterday. Yeah. Man, my memory's kind of fucked, huh? Okay. Sorry, chat. I freestyle everything if you haven't noticed by now. Okay? That's where it was. All right, I'm not totally toast yet, chat. I'm not totally toast yet. Cool. There we go. I was getting concerned for a minute. All right. Lows swept, right? And then we had low resistance highs here. 21,122 basically. And then we had that higher set up here at 21,183. So the idea was we have liquidity up here. We have liquidity here. And we just took liquidity here. So we're bullish down here or just after. Remember, you can go to my tweets. You can post them on your chart. I had said something like right here. One of these couple of candles in here. I had pointed out Nasdaq to you. So what's the very first objective? Well, to be fair, the very first objective is probably like this high right here. But if these are low resistance highs, it's going to push past that and go for this. So that's the very first objective. You can look at that next tweet, that following tweet on that same thread on the Dow Jones. I had mentioned Dow Jones and then I commented on that same thread instead of like filling up the timeline with a bunch of bullshit. You know, not bullshit, but, you know, random tweets. I kept it all the same in order. All right. 944. That's when I mentioned, hey, this is the first set of highs. This is a, break even or profit, whatever. Because we might extend up here, but guess what? We don't. Well, we extend a little bit further here, but we never end up going there. And then we just precipitously have taken a massive sell-off. Okay, there's your 7:30 news from this morning, and then look where we're at. Way lower. And when we talk about equal highs and lows, every once in a while you hear me say, these might be left open. Equal lows can be left open. Equal highs can be left open for a long time. I don't always know how long they're going to be left open for, bro. I mean, I know a lot of things, but I don't know everything. You understand? I know a lot of shit. Don't know everything. All right? Every single candlestick, I have no idea. Yeah, I couldn't tell you if the next minute's going to be up or down. I don't know. Again, the whole point that I'm sharing this with you is because you wait. You wait for something high probability, and if you can get in sync with that, that to me is what's worth the risk. Everything else after that, to me, the probabilities drop off. They drop off. And then why would you put money on that? And we have equal lows just above 43,462. Ooh, you cheeky bastard. Look at that. Looks like an engineered low to me, chat. Looks engineered to me. I have no comment for ES. I have no comment for NQ either. Dow's like the only thing that I would be focused on. But yeah. What do you guys think so far? You guys have any questions for me? Today may not be, the greatest lesson in the world, but sometimes it just comes back to fundamentals, man. Oh, that's what I was saying about Twitter earlier. People are struggling. They're struggling because they're not trading in sync with the higher time frames. If they're trading against the higher time frames like I did earlier this week, it's not to say that you can't be profitable or that you can't pass a combine or at least grow that bitch. I mean, hell, trading NQ, you do not need a lot to pass a combine trading NQ. You also don't need a lot to blow that bitch either, because NQ's $20 a point. Do the math. It's a lot. It's rough. Oh, and that's another point, Lewis. I'm glad you asked that about the dollar index. We'll talk about that too. But the majority of the reason that I believe that people are struggling this week is because they're not in sync with higher time frames. They're not looking at the broader perspective and getting in sync with that. All right. So check this out. Dollar index. All right. You ready for this? Are you ready for this? Watch this. Don't miss it. If you remember last week, all right, last week we were at like 103.40s and we looked at the daily time frame and it was right here on Tuesday the 5th or 2 weeks ago, however long that was. I don't know when that was. Okay. Week and a half. Right there on that Tuesday stream, I told you I was bullish on the dollar. I said, oh shit, I might be wrong then. And that's okay. But if I had to pick a bias, I would have been bullish. But then I admitted I'm wrong because we're going lower. But that was only Tuesday. And that Tuesday ended up being a low of the week, right? The classic Tuesday low of the week. That was also the week of the election. So I wasn't trying to be all like right or wrong. I just expected volatility, didn't know with high confidence of which direction. But based on price action, you already see what this would have been. This would have been an inversion on the weekly time frame. So we talked about the 106 level all throughout here. Go watch the market reviews. If you write down levels on the day that I tell you, it'll be in your journal too. Oh yeah, John wrote on 11/13 and the 12th he said 106.52. Right, because what reason do we have to be bearish? None. What reason do we have to be bullish? These equal highs up here that are presented on the daily as well as the weekly, right? So now watch this. Bullish dollar, okay? Bullish dollar. Bearish indices, okay? And I'll show you this one more time because this to me is what, again, people are struggling on Twitter. It's not shocking, but, you know, if I could speak to the entire Twitter community at once, this is what I would say. I'd say, look, when the dollar, not just reaching 106.52, but reaching to it and through it, what day was that? Thursday. Thursday was the day that it pushed to that level and beyond it. Okay. That was Thursday the 14th. Thursday the 14th for indices was this day here. And that, you know, I didn't set the high, of course, but what have we done? That was yesterday. So what would today be? Bearish for indices. Does that make sense? The indices were primed to go lower into that imbalance, which I've already told you about. I've already shown you that. And so that dollar, right, pushing that, even though the dollar is kind of down today too, the indices and dollar are down today. But okay, that's not the point. The point is we had a very, very bullish dollar. And once we, you know, continued to push for that liquidity above those highs, that is when the indices, they didn't top, but that's when the volatility started to go lower, right? Nasdaq, same shit, lower. Dow Jones, same thing, lower, right? And then that's when I tweeted too. I didn't see the dollar at the same time as far as what I'm telling you for transparency, so that's that. But you can see the alignment though, can't you? When you align higher time frame bias, higher time frame concepts, and then you include the dollar in that shit, you have golden opportunities. You have trades that you wouldn't believe. You have those trades that are like, yeah, easy volatility in your direction. Okay. So what level do we have over here? 43,462 is the ultimate target that I have for the downside for today, at least. Am I going to be mad or upset if we don't get that today? No. Again, I'm not in a trade. I don't care. But if I'm being honest, I definitely want to be right though. Sure. I want to be right because this is also a sport to me too. Even if I'm not participating, I want to be, you know, challenged, if you will. I want a challenge. It's kind of like playing sports and then you're playing like against people that are way worse than you. It's like, well, this is boring because you suck and I'm going to kick your ass. But it's like, oh, I found somebody that's my equivalent. That'd be a good game. But what would be even better is to find somebody that's slightly better than you and then play against them, because now you have to stretch beyond your current capabilities or your current perceived capabilities to grow. And that's what makes a better, you know, sport. And that's what makes a better trader too. I gave you a bias during the election week and that same day. You know what I mean? That's a challenge to me because most people don't want to, oh, I'm not going to trade the election. I'm going to take off this week. Well, okay, do what you got to do, but I'm still going to challenge myself to see if I can pull that off. Because if you run away from challenges, how are you going to grow? That makes no sense at all. You run from danger? Yeah, you're a pussy. So, you know, you don't want to be that, man. You don't want to be that. That's not how you get better. So I'm always trying to challenge myself with a bias or with something. What could we target? What could we hit? Or you know, like I explained the other day, certain imbalances are going to be left open, and I'll challenge myself like, okay, that one should be left open. And then sometimes it is, sometimes it's not, you know, but you learn and you grow, right? Anyway, I completely ignored your question, by the way. the USD futures called the dollar index futures. I don't even think I had those. Dollar index futures. US dollar index futures or some shit like that. I don't trade the dollar index, so I wouldn't know specifically. Appreciate that, Wes. Why do you think I try to call out trades every week? And I'm not always right. But why do you think I do that? It's a challenge. I wake up and it's like, all right, John, find a trade this week. Not for yourself. You can do that. But find one where you can tell the public and they can follow along. That's a different level of, I guess, difficulty. Because you could tell yourself all you want, like, oh, I think this is going to happen or that's going to happen. And you could be right or wrong, and nobody will ever know if you're right or wrong because you don't say anything to the public. And that's fine. You don't have to. But if you're an educator and you're a mentor and you don't, well, what the fuck? You know what I mean? So I'm always like, yeah, wait for a second stage, or wait for this model, that model, wait for whatever. If you sleep in, all right, well, find something that's late, you know. I love this shit, bro. In case you couldn't tell. But, you know, I like teaching too. Okay? And trust me, you would do the same shit. If you could do this, right? You know, we're treating it 44,000, and right now it's 43,500, and we actually might get that alert on today's stream. We're about to run into this macro too. We got this 1 p.m. macro coming up. We can watch it. Let me make some phone calls. Let me press some certain buttons, and we might fucking roll down there. Maybe. If the market makers are nice. You know, you send them a bottle of Avion 44 or 1942 or some shit, they'll help you out. Scratch your back a little bit, you know what I mean? A little early Christmas gift. Never hurt nobody. But yeah, I like a challenge. So we shall see. What else you guys got for me? What other questions you guys have? As we watch like the next 10, maybe 15 minutes of our, you know, currently strongest index today. Not the weakest, but, you know. It would be nice to get that on stream, though. Targets don't always hit on stream, but when they do, it's just chef's kiss. Someone said that the other day. Someone posted some stupid shit, which is not abnormal for Twitter. They were like, oh, the 11 o'clock macro is the best one and all the other macros are lower probability. Study that and thank me later. You fucking arrogant prick. You don't know what you're talking about. It's not just one macro that's like, you know, somehow better than all the others. How many examples have I shown you where certain macros didn't work but others did? What about the 12 p.m. macro or the 1 p.m. macro? Straight goober shit, man. Straight goober shit. Bitcoin, Mason, you're fired. You're the first member who got banned on the same day they joined. Good luck to you. Have fun. What about the two chiefs? Bro, what are you talking about right now? The two chiefs? I don't even know. What are you saying? Is this now short high probability for you or rather not? We are basically shorting in the discount end of the discount daily range. Not exactly. I think it's high probability to go short. The two chiefs, the story you want to tell us. Oh shit, I don't remember. I really don't. I know what you're talking about, but I don't actually remember. GG's. Mason, as far as Bitcoin goes, though, I don't know, bro. I don't know. I think Bitcoin will do what it usually does. I think if everybody thinks it's going to 100K, it will absolutely not fucking do that. I think it would go to something like 97 or 98, maybe even 99, and then drop big time before going to 100K, if it's going to do that. But hey, if it goes straight there, I'll be wrong. I don't care. I don't have any Bitcoin, bro. So don't matter to me what fucking happens to it. No, I am not, Naruto. I am not. I can only read and research so much, and you know what I mean? And it's also hard to tell who is legit and who is not when it comes to that rabbit hole shit. So, you got to take everything with a grain of salt. You know what I mean? I actually just ordered some Russian novels. I'm actually one of a different book comes in today that I ordered a few days ago. But I ordered some Russian books the other day. Printed in English, of course, but oh fuck, I hope they're in English. But yeah, dude, Russian authors, man, are just so good. Like Dostoevsky, bro, come on, bro. Dostoevsky, so good. Yeah, what I ended up doing, it's all so. Dostoevsky at this point is public domain. So you don't have to like pay for the books. You could probably get PDFs online, or you could get the Kindle version for probably like $5. I spent like almost $40 and I got a bunch of physical books, like all of them. Crime and Punishment, the Karamazov brothers or something like that. The Idiot, a whole bunch. just because I wanted the physical ones. But yeah, bro, like if you just go to like Goodreads or something, or you just Google Dostoevsky quotes, bruh, he's just on a different level, man. Different level. I'll do it for you. Here's one. It's like the number one on Goodreads. Above all, don't lie to yourself. The man who lies to himself and listens to his own lie comes to a point that he cannot distinguish the truth within him or around him, and so loses all respect for himself and for others, and having no respect, he ceases to love. Dude, if you guys like actually read some of his work or really like sat with some of his quotes, oh man, it'll fuck your whole day up. It'll fuck your whole day up. It'll absolutely destroy you in a very good way. Yeah, White Knights. I haven't read that one, but how could you live and have no story to tell? Mm. The mystery of human existence lies not in just staying alive, but in finding something to live for. Like, come on, chat. Come on, chat. Man, are we getting this fucking sell off or what? I texted our market makers, the market maker for Dow. I said, please drop that bitch. I'm on a stream. I don't want to embarrass the fuck out of myself. Please drop it. So, no, I haven't gotten through Crime and Punishment yet. I found the Karamazov or the Brothers one. I found that one on audiobook on YouTube. It's fucking 11 hours long. I was like, okay, I'll do an hour a day. And it'll take me a couple weeks. Yeah, 1,200 pages. Miss me with that. I have a limit, bro. Usually, if it's more than 400 pages, I'm not buying it. 300, like 350 is usually my max. Anything above that, I'm like, yeah, you're out your fucking mind. It's too much, bro. Like, the only exception was Robert Greene. But the difference between Robert Greene, watch, now that I said drop it, it's gonna fucking rally. The only difference between Robert Greene and writers like Dostoevsky and a lot of the older people, right, 100, 200 years ago and beyond, the language is much different. So Robert Greene doesn't use words like henceforth and upon which, you know, in like weird old English like that. Whereas some of these older books, like the stuff from the Stoics, you know, they're a little wordy, you know? Whereas Robert Greene is a lot more modern, and it's easier to read, it flows, and you don't have to look up too many words. But with Dostoevsky, bro, it's not just longer, but I read it slower too. So it's like doubly as difficult. It's not impossible, it's just difficult. Oh, that's one thing too. We have to go over gold. We don't have to, but Some people complain that I don't do it, as if all this stuff isn't the fucking same. Read him in college and have reread him. Got into more of his stuff since. Got my lady into his work too. Great works written by a brilliant author. My lady just finished White Nights last week. Yeah. Oh, she preferred Notes from the Underground? Well, Notes from the Underground or something like that is way longer than White Nights, I think. But yeah. Dostoevsky's on a level of just no one touches Dostoevsky, bro. Like nobody. All right. So with gold, okay. Let's take a look at gold. October 28th, that week, right, was all-time highs. Last week, lower. This week, obviously a down week. So where could we reasonably expect for price to possibly make a bottom? I don't try to pick bottoms in bearish market. Sometimes I try to do. I'm not gonna lie to you, but it's not a good habit to have. But if we want to try and do something like that, we do have some different options here. So what do we have in this area? Well, you could put these three down candles together. That's a little janky to me. You also have this imbalance, and we'll mark it. We can do that. All right. And then we also have, what else do we have in here? Besides that imbalance, what do we have? This gap. That candle's close to this candle's open would actually be like up here. But if we want to do from close to close, it would be that. But either way, we can move that over. Boom. Look at that. How difficult is that? Yeah. We trade through it, or excuse me, imbalance. Okay. On that weekly or daily. I think it was the whatever time frame we were just on. Okay. And then you notice how it sinks right into that perfectly. Meets about halfway too. So that was during London, which I'm not up for, but you can see what happens after that. Inversion here on a 5-minute time frame. Beautiful. What's that theory again, chat? The first imbalance created in the opposing run is usually either a breakaway or it's going to be left open. Right? $25.47.9, 25.48.0. Yeah. So it leaves one tick. It leaves one tick open on that 5-minute time frame, which is funny. But anyway, we trade higher. Now this is where things get difficult. Personally, where let me scrunch this up and we'll look at Dow one more time before we hop off here. We do have low resistant highs there, and I can agree, right? I could agree with that. But the issue is with silver, we have they're out of sync with each other, so we don't see the same ideas in here. And then on top of that, just like with NQ from yesterday, you have multiple sets of highs, right? So what's the easiest one? The easiest one to target is the first one. The market can't get to the second one without getting to the first one. I mean, that's just, I mean, come on. right? That's the easiest one. That one is a later target, but it doesn't have to get there. So, Carcel, you posted a chart earlier, and I told you to go watch the Market Maker Models masterclass video, and then I told you to watch the premium discount level 2, because you said you didn't care for your entry, or something you didn't like, or disappointed, or something was like fucked up with your entry is what you said, basically. And I'm trying to help you, bro. Go mark up this range here. I don't know if he's still here, but go mark up those highs and this low. Okay. And then you'll have your 50%. Now go look at your entry. Go look at where your entry was at. Price doesn't always do this, but it tends to do what? It tends to consolidate at 50% of ranges on any time frame. Predominantly the higher time frames, but smaller time frames are no exception. We saw a lot of consolidation here. But where are the best longs? The best longs are going to be in a discount. Or discount of a discount. Okay? So, again, you know, and I'm not trying to like talk shit, but I'm just saying, like, if you want to get better, listen to what I'm telling you. I've always said this. You have your 50%, which is your fair value level. It's not really ideal. It's decent, but sometimes it fucking blows. Okay. The best ones are going to be below 50%, ideally at 25% or lower. So look at that today. Right? Mark up all of them. Your discount is here. Right? And then your discount of the discount is here. Right? From that, again, from the target down to the low, then you have your levels here. So we have higher highs and then lower lows too. And that's like a lot of traders get bitch slapped in markets like this. And I'm no exception to that. Okay. If I'm trading in a market like this, yeah, it blows. But the best times are going to be to buy below old lows. Or if it was up to me, and again, I wasn't up for this here. All right. I wasn't up for that. But what was the better opportunity? It's the very trades that I try to take. It's the very trade I took on Nasdaq yesterday. Well, what's that, John? In a discount, right after the low's been set, ideally around 25%, roughly. Okay? Roughly. So look in here. Again, it doesn't matter. If you want to trade the 15-minute, go for it. 5-minute, go for it. I like 1 minute as well. You don't have to do it, but you look at everybody's entries and then you look at mine, and I'll let you decide, you know, who you want to copy and who you don't. But there's your inversion, right? We trade through that here. We trade right into it right there. So that to me would have been ideally the best opportunity. In here, possibly here as well. There's, I mean, because that's probably the, or somewhere in here actually, because that would be the 15-minute inversion there. So if you were a little bit late, like, oh, there's London's open, and then we drop down below London's open, that's fairly acceptable as well. And then bam, right up to these highs, in somewhere in here, late add-on possibly in here, and then done, or at least mostly done. You could aim for something like that as a final target, but it doesn't get there, ends up rolling lower anyway. And then 730. What was 730? That was dollar news anyway. So you know, again, respectfully, you're trading near 50% and you're trading prior to 7:30 level 3 news. Neither one of those are ideal. 50% of ranges and trading before 7:30 news. Neither of those are ideal. And that's why your trade went the way that it went. Now, it looked good. I mean, you sat in it, the market eventually went your direction, you partialed, and then you got out break even on the rest. That was still a good trade. Like, don't get me wrong, growing an account. But when you reflect on that trade this weekend or today, just look at it. How did you feel? It was probably fucking annoying. Right. And now you know why. So you're welcome for that. But all right, anyway, let's do a little quick update on Dow and then leave it at that. It looked as if we were going to run those lows right during this macro, and then decided not to. So I'm still going to have 43,462. That's still, you know, an alert that I have. If we don't get that today, it won't be a big deal to me. I'm not going to trade anything this afternoon. I probably won't. I tell you guys I don't trade, and then I go and I trade. Most likely, I'm not going to do anything here. I'm going to go have lunch and probably just, you know, enjoy some time outside and just leave it at that. So that's all, folks. Y'all be good, man. Be blessed. Don't do anything stupid this weekend. Make sure to read something. Make sure to study the trades that you took this week. All right. Learn from your losses, learn from your mistakes. Remind yourself of what you did right. Try to do more of that and less of what you fucked up on. And that's it. So, well, of course, we got a lower low on ES, but not on Dow. And then same thing. We got lower lows on NQ, but never on Dow. Wow. Classic. Because it's, even though they're all down, Dow is the strongest, and it's like reluctant to go lower. Doesn't mean we can't, but it's just more reluctant to do so. And that's all right. That's what you get for shorting the lagger or shorting the leader anyway. That's what you deserve. Missed marks. That's okay. All right. See y'all on Monday.
Sleepless nights, lonely mornings. 'Cause you won't pick up, I can't apologize. I regret things said in the moment, but everything we do just tells lies. So I'm gonna make a bad decision tonight, and it's finna get you off of my mind. When you pull my trigger, I pull it good, see you on the other side. I'm gonna make a bad decision tonight, and it's finna get you off of my mind. When you pull that trigger, I pull it good, see you on the other side. See you on the other side. See you on the other side.